Hello and welcome to the next of these thoughts while I'm walking the dog. It's February the 1st, 2021, and a reminder that if somebody bearing my name is soliciting you to buy Bitcoin or any other asset via DM or message, that is not me, but someone pretending to be me. So today we ask, is silver the next Gamestop? Never in the history of financial markets has there been a commodity with as much potential as silver. Every time you look at the investment case for the metal of the moon, you quickly become convinced it is on its way there. And Lamborghinis and other spoils start to fill your dreams. And yet, never has a commodity so disappointed its investors so consistently. Silver is trading at the same price today as it was 40 years ago. It is the metal that always lets you down. And last week, the financial news was dominated by the story of the extraordinarily successful raid on Wall Street by a gang of Reddit readers. And thanks to some superlative research by a user who goes by the name of R Deep Fucking Value, his French, not mine, but please excuse it all the same, it was discovered that there was an excessively large short position in video games retailer Gamestop that amounted to 140% of the float. Given that only about 25% of the float actually trades, the effective short position was much greater than that. And here was Deep Fucking Value's plan. They were going to short the short sellers. Translated into plain English, buy the stock and not sell for love nor money. And with such an excessive short position, short sellers would not be able to cover and the price would be driven much higher. His, or is it her? No, we know Deep Fucking Value is a bloke. His investment of under 50 grand many moons ago built into a pot worth more than 30 million. And seeing the ongoing success of the trade, an online mob gradually built up. Wall Street did us in 2008, now we're going to do them, was their mantra. And the mob bought up as much stock as they could and then levered up with call options. The mother of all short squeezes was the result, and the stock went from under $5 to north of $400. We all love to sock it to the man, and the man was well and truly socked by an online peasants' revolt wielding little more than their stimulus checks. Or so the story goes. It's a bit more nuanced than that, but who cares about nuance in a mania? And buoyed up by the success, the mob started buying other companies, most notably cinema chain AMC Theatres. And there is now talk of bringing down Wall Street. Perhaps some have got a little ahead of themselves. GameStop was just some little-known retail stock, and the trade just took out a group of specialist short traders. But hey, who cares about nuance in a mania? So their next target is silver. Why silver? Because it is the most shorted metal on the planet, or so we're told. The explanation for its perennially disappointing price performance is manipulation. The story is that JP Morgan is suppressing the supply on the COMEX, that's the commodities exchange. But JP Morgan cannot deliver all the silver it has sold. The silver sold short amounts to more than annual production. If enough people buy silver and demand delivery, the ensuing short squeeze would bring said bank down. Now, this story's been around for as long as I have, but in the last couple of days, it has caught hold once again, more on Twitter than on the infamous Reddit channel, Wall Street Bets. But even so, a mob armed with memes has formed nonetheless. And in weekend trading, silver has gapped up dramatically. It closed last week at $27. Now it's touching $30. So let's quickly summarise the investment case for silver beyond it's the next for the Wall Street Bets treatment. Like gold, silver is a monetary metal. The words silver and money are even interchangeable in umpteen different languages. Argent in French, for example, plata in Spanish. A pound was once a pound of sterling silver, and $1 was once an ounce of silver. And perhaps as a result, the metal has a tendency to arouse a certain patriotic sentiment in some quarters of the US. And so one investment case for silver is the same as the case for gold. It's an inflation hedge in an era of monetary debasement. It is nobody else's liability, and so on. And here's your fun silver fact of the day. The 30 pieces of silver that Judas was paid to betray Jesus amounts to about 15 ounces. That's $450 in today's money. $450 is pretty cheap for a Messiah, I'd say. And it's another example of how undervalued silver is today, or what a rotten inflation hedge it's been, depending on your point of view. Today, they'd have to pay him in Bitcoin. Meanwhile, silver has a plethora of exciting industrial uses, especially in technologies, from medical to electrical. Every smartphone has silver in it, every computer, every jet engine, every solar panel. Demand for silver on photovoltaic cells, by the way, went from 1 million ounces in 2000 to around 50 million ounces last year. It's about 5% of silver's annual demand. And it finds widespread use also in battery technology, in 3D printing. And the question is not so much which modern technologies contain silver as which don't. New discoveries are being made all the time about its ability to combat infection, fungi, bacteria, even bad smells. And as a result, demand is increasing from medicine, biotechnology, and clothing. The metal is used in everything from the treatment of warts and bad breath to purifying water. It's also an ingredient in hospital paint because of its antibacterial properties. Heck, they'll probably soon find out it cures COVID. It certainly fights off vampires. And then on top of that, there is jewellery and investor buying, which together with silverware makes up about 50% of annual demand. And often the metal is in deficit, but currently silver supply roughly matches demand at just below 1 billion ounces per annum. A little bit of increased investor demand, however, and quickly things are thrown out of balance. And yes, there is the potential to send the price quickly higher. About 80% of silver's billion-ounce annual demand comes from mining, the rest from scrap. And most silver is produced as a byproduct of lead and zinc mining, which has suffered dramatic underinvestment over the last decade, leading to a paucity of major new discoveries. There are some pure silver mining plays, but with 2 or 3 exceptions, most have struggled to make money in recent years, either through inept management or a flawed business model. The result is perennially disappointing share price performance, with most trapped in a perpetual cycle of disappointment. Currently, silver trades around $30 an ounce. It gapped up over the weekend, as I said, but what's a fair price? Well, silver is about 15 times more abundant in the Earth's crust than gold, so one valuation methodology says silver should be 1/15 of the gold price. This was the rough ratio between the two. Historically, 15 silver coins got you a gold coin of equal weight. Gold today is $18.50, so 1/15 of that is $127. Now, wait a minute. That is nearly 5 times higher than where we are today. That is always the logic that gets the silver bug salivating. Silver should, in inverted commas, be over $100. In 1980, you could buy the average UK house, which is currently over 300 grand, for about 1,000 ounces of silver. Current value, £20,000. Silver would have to rise 15 times to something over $200 an ounce for that particular ratio to be achieved again. In short, what's not to like? Silver seems to have so much going for it. But silver's all-time high was $50 in 1980. It retested that level again in 2011 and failed. And here we are today at $30. The silver story has been about for as long as I can remember, and it just never seems to deliver on its potential, not for any extended period anyway. For years it doesn't move, or worse, it sinks. But when it runs, it really runs. And now it's the next GME narrative. It looks like another run has got started. I own silver a little bit. I'm long. I want it to go up. I'm all for bringing down JP Morgan if it means quality memes. But I also know that if you actually want to make money from silver, you should hang around for a good time, but not a long time. Gamestop was a $1 billion market cap company. Silver's a $25 billion market. The short squeeze is not such a given. Many short sellers, often mining companies, locking in a price for next year's production rather than actually trying to speculate on the silver price, will stand aside in the short term and let the MOV have its day. But they will come back and try to hammer the price. They always do. If silver can clear $30, there's a good chance it will run all the way to 50. There is a massive, though, greater fool theory situation in play here. And perhaps this time, third time lucky, silver will get through $50. But remember, it's silver. As you've heard me say many times, silver always lets you down. It's the metal that always disappoints. Every silver lining has a cloud. The ancient Greeks should have had a myth for the frustrations born out of investing in silver. This compelling, alluring, irresistible and beautiful investment that lures you in with its vast potential. And yet once trapped, you are doomed to disappointment by its never-ending failure to deliver. As I say, stay around for a good time, but not a long time. Thanks very much for watching. Please share this video with a friend. Please subscribe to my channel. And please buy my book, Daylight Robbery, How Tax Shaped the Past and Will Change the Future. It's now out in paperback in the US, and the audiobook read by me is ace, and it's on Audible and elsewhere. Thanks very much for watching. I'll talk to you again soon.